Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
$11,070 taken, 11,071, 72. Okay, so it's a 0.6% higher.
Market's doing just fine, 35, 36 odd points in the green. The Sensex is up 90, 91 points.
Any bank which finds under RBI rules that stressed companies have not resolved their problem can take power companies to the NCLT.
The midcaps were under pressure since morning and advance decline at about 1:3. Normally when this happens, it's a matter of time before the index also slips, and that's what you have seen.
The Nifty is down about a few points under actually. We'd seen a bit of a scare actually earlier on. From there, things not too bad, just a shade under that 11,000 mark.
Metals were down. Tata Steel, Vedanta, Hindalco all down about 3 to 5%. UPL down 2.5%. Tata Motors down 2.5%. Levers been a bit of a problem point for the market, down 2%.
Markets end lower after a volatile session. Sensex falls almost 150, while Nifty fails to hold 11,000. Metals stocks see major selling. Midcaps also disappoint.
Upstream oil stocks surge and trade. ONGC and Oil India gain nearly 3%. They end higher on the account of lower oil prices, global oil prices, as higher subsidy fears recede.
Banks lag in trade. Nifty Bank Index loses 0.5%. IOB and Corporation Bank rally on higher than expected capital infusion from the government, while PNB and Allahabad slump. Bandhan Bank surges as well after reporting a 47% jump in its net profit.
Commercial vehicle major Ashok Leyland takes a big knock in trade. The stock loses 14% as the company confirms loss of market share to Tata Motors in the medium and heavy commercial vehicle space.
Cement maker Ultratech ends the day in the red. Stock slips over 1% after reporting an in-line set of numbers for the first quarter with a slight beat on margins. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back. This is the show where we tell you all about 6 hours of trading in just 5 lines. I'm Lata Venkatesh and with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. I mean, for mid caps and small caps, another bad day, although large caps ending, not in a very bad fashion, down about 30 odd points or so. As you said, over the next 30 minutes, we will talk about the top market stories. Our guests will answer your questions. To help us answer your questions, we have joining us today Gaurang Shah and Ashwini Gujral. Gentlemen, both of you, thanks very much for being with us here on this edition of Markets Today. Before we get to the Q&A session, let's quickly wrap up what were the dominating drivers for trade today. Lata.
Okay, well, first up, of course, we started the day with Asian stocks in the green, but with every danger of getting into the red because the dollar index was strong. A strong dollar is usually a sign of risk aversion, and that's what happened. We also opened in the green along with Asian markets. We had, of course, lower crude prices to help us, but the strong dollar got only stronger. From 95, the dollar index went on to 95.22 around noon, and this is all because of the strong positive assessment of the US economy coming from the Federal Reserve Chairman, Jeremy Powell. He said as of now, of course, they're going to stick to their rate hiking timetable, and they don't think that the trade disruption has as yet disrupted the economy. That strength that the dollar got created the risk aversion. We saw Asian stocks falling and Indian stocks outperforming the fall, in the sense they fell more than other Asian stocks. Nifty and Nifty Bank fell despite a couple of things going for us. Lower crude prices even below $72, 71 and change, and lower bond yields as low as 7.71 when markets started trading today. In spite of it, there were only sellers at higher levels. The Nifty couldn't cross the 11,070 resistance. It's been a resistance for some time now. And once it couldn't cross, you only saw people selling off and taking profit. The lead losers were metal stocks. Globally, metals was weak, so ours were weak too. PSU banks, it was just a trading bounce, and some of them held it. Prashant will detail those to you. Highly leveraged companies, the usual weak ones, the varieties like the HCCs, Vakrangis, JP stocks, those were the ones that led the fall. What stood like a rock oil refineries, obviously, because crude was cheaper. ONGC is added to the list, and that's an interesting paradox, which we will explain. HDFC Twins and Bajaj Twins, traditionally the strong stocks, kind of weathered the selling. But tell us more about the stock-wise details, Prashant.
Well, absolutely. Just one more thing, which was not happening around what happened here, was the Parliament session kicked off. And, I mean, nothing really happened.
As always, more noise, more fury.
Noise, and the Speaker admitted the sort of call of the opposition parties for no confidence motion. I mean, it's most likely just going to not go anywhere, but this does bring to fore political risk in that sense as well. You know, kind of sort of it's a familiar feeling and not a good one when you connected back with the market. Let's talk about stocks. So mid-caps, small caps, essentially the way the pressure point is, as Lata pointed out, the indices on your screen, metals, real estate, autos. I mean, in terms of sectoral losers, really the top ones. Large cap stocks which were under pressure: Tata Steel, Hindalco, Bank of Baroda, Tata Motors, Lever lost again, Mahindra and Mahindra, and Axis Bank. Anything between 2% to about 3.5–4% on these stocks. ONGC, IOC, HP, BP, these stocks did quite well. Although, I mean, ONGC got to about 165 levels. By close, it was under 160. So there was a bit of profit taking, which really also set in there. Oil marketing rallied quite late in session. I mean, didn't really participate from the beginning. Big cuts, and this is talking to the mid-cap and the small-cap falls of 1%, 1.25%. Ashok Leyland, big one. HT Media, big one. What's common? Results to both of them. HT Media also by close was down 15%, 1.2, almost 2 million shares there. Ashok Leyland 18% lower. We had JSPL, which was down 6.5%. You had DLF, which was down about 5%. Union Bank, OBC, PNB, the PSU Bank pack on your screen. And there were stocks like Idea. We broke a story on Idea as well. We'll talk about that later. United Breweries was the other one, which was quite weak as well, Lata.
Okay, thanks for all those details. But now let's invite our guests. First to you, Ashwini, what do you make of the markets? I know your first call in the morning was that if 11,070 is not conquered with emphasis, then you should sell. And that trade worked, of course. But do you see more weakness?
Remains that mid-caps, within 45 minutes start to collapse. Now, 5 stocks can keep the Nifty higher, but you cannot get into, fresh territory with those 5 stocks. And today also we've ended like 400 advances, 1200 declines. A market is made of all stocks. You can't have 6 stocks trying to keep it higher. Now the issue is we've tested this higher zone of 11,050 twice. Now, in case any of these 5 or 6 stocks start to move down, then 10,930, 950 also gets vulnerable, because you are in a very tight 100-point range at the absolute high of a rally. So if that starts to happen, chances are we could come out of the lower end, because if a market is not able to take out the upper end of the range, it generally tends to rush to the lower end of the range and often breaks it.
Okay, so Ashwini, just to put some numbers on it, will you short the Nifty now or wait for a higher level, or a lower level, a break?
So for example, tomorrow, if you for any reason have a 25-point gap up, so any rallies towards 11,000 would now become shorting opportunities.
Okay, gentlemen, stay on. We'll come with more headlines. The second headline: upstream oil companies soared in trade today. The likes of ONGC and Oil India up between 1% and 3% on account of lower crude prices. That's a bit contradicting. It's in contradicting the regular trend when receding prices actually pull down those stocks. Sonal Butra is here to explain exactly what is going on and why people are sticking to ONGC and Oil India. Tell us, Sonal.
Well, yes, ONGC was one of the biggest Nifty buzzers in trade today, up around 2.5%. And this is despite the fact that oil prices have fallen by around 10% in this week itself. But there is a probability that because of this particular fall, ONGC might be asked to share lower subsidies. Well, different brokerages have different views about the subsidy sharing regime. Edelweiss for Q1 of FY19 is expecting a subsidy share of around $5.5 per barrel. Motilal, on the other hand, expects that there will be no subsidy sharing at all for ONGC ONGC. That definitely bodes well for the stock. Apart from that, there were talks that there could be a windfall tax on these companies because of higher realizations. However, if we see the past performance of ONGC, it has never really crossed the $70 per barrel mark in terms of net realization. Highest it has recorded has been around $67.71 per barrel. That was last quarter. So the question of taxing windfall gains really doesn't arise. This is another breather for these companies. Also, there have been reports that the company has agreed to sell that 49% stake in Pawan Hans, with the valuation stands at somewhere around 500 crore rupees. Though this is not that big a positive, but definitely some trigger for the stock to move ahead. Back to you.
Okay, thank you very much for explaining that, Sonal. Let's get to the question and answer session. A viewer, Shiv Kumar, is calling us from Pune with a question on ONGC. Shiv Kumar जी, कहिए आपका सवाल क्या है?
मेरे पास एक्चुअली ONGC के 50 शेयर्स हैं
जी,
लगभग 1 साल से है मेरे पास, तो मैं उसको कंटिन्यू करूं या बेचूं, ऐसे दैट्स एक्चुअली आई एम आस्किंग द क्वेश्चन.
आपका टर्म क्या है? यू आर अ लॉन्ग टर्म इन्वेस्टर या
लॉन्ग टर्म के लिए?
आप शिव कुमार जी, आपका किस दाम पे खरीदा आपने?
एक्चुअली इसका याद नहीं है, जस्ट 1 साल हुआ होगा नियर बाय उसका.
ओके,
अच्छा, तो हम अपने एक्सपर्ट से पूछते हैं. गौरंग, व्हाट वुड यू टेल हिम इफ यू कैन आंसर इन हिंदी?
तो आप सभी को शुभ संध्या मेरे तरफ से. और शिव कुमार जी, अगर लंबी अवधि का नजरिया का तात्पर्य यानी कि उसकी परिभाषा कम से कम 2.5-3 साल है, तो आप यहाँ पर निवेशित रहें. ONGC पर हमारी काफी लंबे समय से खरीदारी की राय बरकरार है, और लक्ष्यांक के रूप में अगर मेरी याददाश्त सही है तो करीबन 210 से 225 तक के लक्ष्यांक हैं हमारे. और आज मंत्री साहब बात कर रहे थे, ऑयल मिनिस्टर साहब श्रीमान धर्मेंद्र बता रहे थे कि उन्होंने कुछ परिवर्तन किया है. धर्मेंद्र प्रधान जी ने अपनी जो नीतियां हैं उनमें, वो मेरे ख्याल से ONGC और ऑयल इंडिया जैसी कंपनियों की यानी कि ऑयल एक्सप्लोरेशन कंपनीज के लिए बहुत ही सकारात्मक हो सकती है. लेकिन इन सब नीतियों को जमीनी स्तर पर अमल में लाने के लिए और नतीजों पर बेहतर रुझान लाने के लिए कम से कम 2.5-3 साल लगेगा. अगर उतनी समय सीमा है तो आप बने रहें.
Okay, so if you're a longer term investor...
Apart from the advice, there's also some beautiful Hindi from Gaurang.
Absolutely, Gaurang, you're clean bold. Well, that was the longer term advice though for Shiv Kumar. But for the shorter term trader or investor, Ashwini, what is your take? ONGC came out and performed out of nowhere almost today. Do you think it has legs to run?
The point on ONGC is that it's in a range 155-160 downside, 210-215 upside. So that way it was totally dead and beaten up, and hence it's going up. Now whether it gets back to 200-210, that we'll have to see. But it's not the strongest of stocks where you are going to get great upsides. So it's basically a trading rally, and these days trading rallies tend to fail without any reason.
Okay, hope that answers the question on ONGC. The third headline of the day then, banks were the laggards in today's trade. The Nifty Bank Index was down about 0.5%, led by PSU banks. IOB and Corporation Bank rallied on higher than expected capital infusion by the government, while PNB Allahabad Bank slipped due to profit booking. On the earnings front for banks, Bandhan Bank surged over 6%. After a slow start, actually, they reported a 47.5% jump in its net profit for the first quarter. This as the bank saw a sharp decline in deposits, leading to a jump in its net interest margins. Let's quickly listen in to what the management had to say post the results.
The net NPA, which was in a 0.54 at 58, has come 0.64%. I like to mention in here, we are maintaining and trying to control this, the NPA, with maintaining the OTR, on-time repayment rate. So we are daily basis calculating on that, and on that rate is coming very good, 98.89% as on June.
Okay, on to another viewer's question. Praveen Prasad from Bangalore has written to us, and he has a question on Bandhan Bank. Has been holding 150 shares of this bank for the last 3 months. Wants to know if he should hold or sell. Well, he has not SMS'd us his time period, so I'll go to both of you. Well, as a fundamental view, Gaurav?
So Lata, as a disclosure, during the IPO time, we had come out with a subscribe recommendation from a long-term point of view, and from those levels to today's rally of close to about 7% and a price of 600 rupees, I think the stock has come a long way. I would not advise a fresh investments at current level, but if somebody's got invested during IPO or lower level, they can continue to work.
Okay. What about Ashwini? Ashwini, what would your take be on Bandhan Bank? It performed well on a day when, stocks generally did not do well. Does that make it a buy?
See, the bank itself may be good to go long, but the issue is that the bank Nifty is at the top end of the range. So if you just see it in isolation, so maybe, a target of 750, 760 is likely, but try to buy things at a decline. I think 550 is a fairly strong support. Any declines towards that should be used to buy.
Okay, buy on declines. The word coming in on Bandhan Bank from Ashwini. We take our first break on the show here. Stay tuned. Gaurang and Ashwini stay on. They'll answer more of your questions. We're back in a jiffy. Welcome back. You're with us here on Markets Today Talk Back. Ashwini Gujral and Gaurang Shah have been answering your questions. We, of course, wrap the day's trading hours through 5 headlines. We got through 3 of them. Here's the 4th headline of the day. Well, we had commercial vehicle major Ashok Leyland, which saw a very sharp knock today. The stock slipped over 14% as the company confirmed a loss of market share to Tata Motors in the medium and heavy commercial vehicles segment. The management also added that they will undertake more price increases going forward. Well, let's quickly play out a soundbite of the management conversation we had earlier in the day.
The market share for the current quarter is 30.2. This is on MHCV segment, and we have fallen approximately by about 4%, 4.5%. But on LCV, let me share with you that we have gained market share. So LCV has done wonderfully well. It has posted a 34% growth in volumes, and we have moved from 15 to 16%. We will have to raise prices if raw material prices continue to go up. I mean, there's no other choice, because ultimately you have to do business, but do it profitably as well.
All right. So the company's claim was that, yes, we lost market share, but it was by design. We decided not to play the volume game and sacrifice margins. We will only do it when our margins come our way. So let's get to a viewer question. A. Rajendran from Kanpur has written to us. He has been holding 200 shares of Ashok Leyland, purchased at 110 rupees. Now he's holding it for a year. He wants to know whether he should sell. Okay, so it saw its highs and now it's almost coming back to 110. First to you, Gaurang, what should he do?
Well, Lata, I think on Monday we had that overloading news come through for a 25 tonnage truck can go up to 28.5 tonnage. Stock corrected over there. Then it recovered intraday. Then yesterday we saw recovery. Again today we had the reaction on the numbers. Well, I don't think one quarter numbers should confuse you in terms of your conviction and confidence on long-term investors for Ashok Leyland. As a disclosure, Lata, we've been positive right from 70, 75. That's the time when Duja Foundries got merged with Ashok Leyland and there was a lot of negativity. From those levels, stock went up to 165, then it is retraced. Long term, I would advise to continue to hold on. And if you get a bad day and a dip below 100 or close to thereabouts, I think it is time to even add to it or even invest afresh.
Okay.
Ashwini, I mean, same question to you. Would you say the selling is close to some sort of a climax level, or is there more left, more chance of the downside?
Market, I think wherever people can see profits, they are getting taken off. So I don't think it's really Ashok Leyland's fault. That's happening throughout. And basically the BS4 low was about 80 bucks. So my best Ashok Leyland buying zone is probably 80 to 85. It can get there given the state of the market. So that would be the zone where long-term investors should try to buy, or let Ashok Leyland stop falling, like what happened with Shriram Transport. Till that does not happen, you have to let it fall.
Okay, we've got a question on Tata Motors now. So, I mean, as you heard the Ashok Leyland management say, they lost market share to Tata Motors, the other big player. Tata Motors stock also has been losing ground steadily. Vikas Jain from Pune has written to us with a question on Tata Motors. He's been holding 25,000 shares of Tata Motors. His cost is 493 rupees for the last 15 months. He wants to know if he should hold or sell. I mean, you know, the stock is essentially almost half of what his purchase price is, and his quantity is quite large. Gaurang, what would you tell him? Tata Motors?
So first of all, Prashant, Ashok Leyland lost market share to Tata Motors and it fell 10%. And Tata Motors has been falling for the last 2-3 months, despite of gaining market share. This is the irony of the, stocks. But, we remain positive. Unfortunately, I don't know whether Mr. Jain had a short-term trade of 25,000 shares going long and it went on the flip side, turned negative, and he's stuck with it. At his price, I think first of all, it's going to take a long time, 2 years plus to recover to those levels. Secondly, he's holding 25,000 shares close to about 495 or 490 odd levels. If he can average, I would advise him to average. I don't know how many quantity he can average in case if he's got capital to invest for a 2.5 year plus time horizon. We remain positive on Tata Motors. We are having a buy call on Tata Motors.
So, I mean, a lesson to buy only with perhaps short stop losses, or maybe simply trust mutual funds. I don't know whether they don't make these mistakes. But to the last line.
Well, so cement maker Ultratech also reported numbers today. So we essentially had the stock which ended in the red. The stock slipped over 1%. Inline set of numbers from Ultratech for the first quarter with a slight beat on margins, which actually came through. Nigel is here with all the finer details, the important numbers to watch out for. Nigel.
Well, Ultratech Cement's numbers are more or less in line with a small beat on their margins. The top three numbers, top line growth came in at around 30.5%. The street wanted more, around 32% is what they were working with. So that was a small miss out there. But in terms of their margins, well, that was a beat because the street was working with a number of around 18.1%. It came in at around 18.7% and profitability bang in line. Now, the top line growth of around 30.5% was primarily because of volumes. The volume growth was in excess of around 32%, telling you that realizations a bit of a contraction on a year-on-year basis. Now, cost pressure was expected, and that's precisely what happened. So, power and fuel costs as well as freight costs, both of them did spike up, and that's what led to margins getting compressed around 18.7%. But mind you, that was better than the 18.1% that we were working with. A bit of an operating leverage played out because other expenditure growth was only around 19% when you have sales volumes growing by more than 30%. Finally, the net profit number more or less in line, coming in at around 600 crores odd.
Okay, take a point. Mild miss and mild beat was the combo from Ultratech. Mild miss on revenues, but mild beat on margins. We have somebody asking a question on this stock. Kumar from Tamil Nadu has written to us. He wants to invest 60,000 rupees in Ultratech for the long term. He wants to know the right time to enter the market. Gaurang, what do you think? Can he get it cheaper, or is this a good time to enter?
I am a miserable performer when it comes to timing and pricing the market, Lata. So I would leave it to Ashwini if he can do a better job over there. But we have a positive call on Ultratech, let me say that. And, all the policies the government is unfolding, whether it is Pradhan Mantri Awas Yojana, Pradhan Mantri Sadak Yojana, Gramin Sadak Yojana, Udan 1, Udan 2, freight corridors coming up, ports coming up, affordable housing for all this will require cement and metal as core inputs. So we remain positive and we have a buy call on Ultratech.
Okay, well, Ultratech, to be fair, cement stocks have underperformed enough, and therefore, if it's fundamentally a sound buy, perhaps the gentleman should at least start purchasing. Okay, there's more news that happened in the markets, but in the primary market, HDFC decided to take its asset management company, its mutual fund management company, public. HDFC today announced this IPO offering, said it will open on the 25th of July. HDFC Twins rose in trade today. HDFC, of course, on the back of this announcement, HDFC Bank was rising for other reasons.
Another fifth HDFC group company to come into the market. HDFC Bank,
Insurance,
there's Life, there's we're going to count GRU, which is a
group
company
and
as well.
Yeah, of course, this AMC now coming in. HDFC Bank incidentally rose because it was expected that it will give shares to HDFC at 2050. But yesterday, when the final announcement came, they have given the share at 2175. So there was a bit of a market catch-up on HDFC Bank. That's unrelated to the IPO. At the IPO offering, at the road show, at the press conference, Deepak Parekh spoke, and let's listen to what plans he has.
With the launch of HDFC IPO, AMC IPO, this will be now the 5th listing within our group. We have always believed that listing best reflects the value we have created in our key subsidiaries and associates. As I've always said, creating long-term value requires patience. HDFC, along with Standard Life Investments, has nurtured HDFC AMC for 18 long years. And based on the way we envisage India's future, we thought this time was right. This was the apt time to get our AMC listed.
All right, you will hear more about the HDFC Asset Management Company's IPO. But for the moment, we wrap up this edition of Markets Today Talkback. Thank you very much for watching.